Hi, everyone, and thank you for joining today's webinar or live stream. My name is Tammy DaCosta, and I am bringing you the latest crypto news. Now, what we see on the screen is currently, so we're looking at crypto, and there's a lot that's going on. Not exactly, well, just isolated to crypto, but just with markets as a whole. So let's go through it. And what we see today is there's once again green on the screen. Now, this is different to what we've been seeing for the past week, or actually more than the past week. So, what we've been seeing for the past like 3 weeks, or at least even for the month of March, we've been seeing a lot of red on the screen. And not only for crypto, but as I said, for the markets as a whole. So what we're going to do is we're just going to look at some of the key drivers of price action. And once again, I mentioned last week about the tariffs, and tariff tensions are really, really heightened at the moment. So last week, for those that aren't aware, we had Liberation Day, and that was Donald Trump's. He was talking about reciprocal tariffs, and what we've seen, while Donald Trump in the first term, back in 2016, when he was first elected as president, his monetary policy, or not exactly monetary policy, but his government policies were very much geared to tariffs. But there, it was kind of isolated to China. Now we see worldwide threats. And last week with Liberation Day, and with the whole reciprocal tariffs, he implemented tariffs across 187 countries. So he said everything, so all imports going to the US would actually be subject to 10% tariffs, and that was implemented on Saturday. And then there are heightened tariffs for certain countries. Now, his whole reason for tariffs are the fact that he says that countries have taken advantage of the US and they've been charging them tariffs, and now he thinks it's only fair that he reciprocates. So, as I said, that was implemented on Saturday, and then reciprocal tariffs for higher countries such as China. China is now subject to a total of 54% on everything that's imported to the US. Now, why that plays a role, or why it's important, is because tariffs are basically taxes on anything imported to the United States. And currently, the United States is still a services driven market. So now what's happened is everything, as I said, everything that's imported is to the US. He's trying to promote local production, but this also has a knock-on effect. And he expected countries to pretty much give in and to lower their tariffs, but now you're getting a lot of backlash. And this is because, as I said, in 2016, it was very much isolated to China. Now it's worldwide. So China's basically said, okay, you're hitting us with 34%, and we're going to reciprocate. Now, if you look at big companies such as Apple and NVIDIA, okay, NVIDIA's very much with Taiwan and South Korea, but even those countries are still also subject to a lot of the tariffs. He's also implemented tariffs on aluminium and steel, and that came into effect in March. And that for not only for the United States, but aluminium and steel worldwide are very much in demand. And that's because a lot of those minerals and a lot of those resources are also used in the tech sector and in AI. So, along with China basically saying, okay, we're going to reciprocate, they're also going to say, okay, you want rare earth minerals, and we're also going to hit you with tariffs on that. And they also looking at the big 16 companies, or a lot of companies that they're saying, okay, fine, you're also not allowing our companies like TikTok into the United States, so we're going to reciprocate. And with Apple, as I said, a lot of those big companies, those are the biggest, the second largest markets, besides from the United States. So, for example, Apple's iPhone, we would say, okay, I'm not too sure in dollar terms actually, but we would say that total cost of production is basically going to rise about 40%. Now that's huge because inflation is still higher than the 2% target for the Fed Reserve. And now we're also getting interest rates that have been supporting the US dollar. And now, because there's additional recession fears, and a lot of banks and analysts have actually diminished, or they've cut their forecasts for the United States. So last year and since the COVID pandemic, we saw a lot of fiscal stimulus going through the US, and we saw a lot of lower interest rates. And now, because of inflation, they've been hiking interest rates. And now, even though the United States was saying that they're not in a hurry to actually lower rates, now they may be forced to, because everything is looking very dismal. And we did have the employment or unemployment report, and that was still higher than anticipated. That was on Friday, but it didn't do much to actually support stocks and to support the US dollar, because these tariff threats have basically taken over sentiment. So now, if we're looking at crypto markets, and as I said, we're looking at the Federal Reserve, and Jerome Powell's also expected to speak tomorrow, and it's not looking very positive. Before, he was saying, okay, everything's transitory, meaning that it's going to blow over. And last week, he basically turned around and said, this might not be the case. We might have to do something to support governments or to support the United States, because the probability of recession is now heightened. And we saw in the 2008 financial crisis when, and we've heard the terms, well, if you're an analyst, I can't generalize, but generally, a lot of the times we say when the United States catches a cold, the world sneezes. Or actually, it's the other way around. When the United States sneezes, the world catches a cold. And that's because, whether we like it or not, it's still the world's largest economy. So I don't have the stats on screen at the moment, but if we are looking at GDP, which is the total amount, it's gross domestic product, which is the amount of exports minus the imports, and it's how much production comes out of a certain economy. Now, as I said, it's still the world's largest economy, with the GDP coming in at about 27 trillion per year. China is second, but that GDP ratio, or the total GDP, is only at roughly 17 trillion. So we see there's still a large discrepancy, but we have seen a lot of economies, especially those with BRICS, which are emerging markets, trying to get away from the dollar. And yet again, they haven't really been able to, especially because of the dominance, and it is going to take some time for that to actually filter through. Now, if we look at fake news, yesterday there was a post that pretty much said that there was a tariff deal. Now, last week, the NASDAQ and the S&P, which are also very large stock indices, and the S&P and NASDAQ, actually, we've got the Magnificent Seven that make up a huge amount of the total stock market. Now, in roughly, since the tariffs were announced, which was last week, Wednesday, if I'm not mistaken, we saw markets sell off drastically. And this was in crypto markets, stock markets. Gold hit a fresh all-time high. And this was also the main drivers of price action last week. And in roughly 3 days, I think the Nasdaq and the S&P shed about $5 trillion, if I'm not mistaken. And that is obviously, it's basically reiterating the fact that these tariffs are actually a big deal to markets, especially because it's not only targeting China, but it's actually targeting the world as a whole. And especially with commodities, even though oil has actually benefited, but that's also because OPEC is now increasing production, the long-term impacts of these tariffs are actually going to be really, really big. And even though markets are pricing in the tariffs to a certain extent, we also need to realize that a lot of the data that comes out is actually lagging, which means, including the non-farm payroll reports, it is looking at the previous month. So we haven't actually, firstly, a lot of those tariffs haven't actually been implemented just as yet. But with regards, especially with China, I think the US, in my opinion, was expecting China to retaliate, well, not to retaliate, to pretty much accept the tariffs and to basically just go on with things. And China hasn't done that. They've said, okay, you've already hit us with 20% tariffs and we've kept quiet, but now you're hitting us with an additional 34%. And China's basically said, okay, fine, we're hitting you with 34% as well. And if you understand, or if you're aware as of the DeepSeek, scenario, we all know that AI, well, once again, I can't generalize, but AI has been a big theme, especially throughout the year, or for the past 3 years, actually. And there's been a lot of investments in AI and in the tech sector. Now, Donald Trump is basically saying, okay, if you're actually doing production in the US, you're not going to be subject to these tariffs. But a lot of companies import from China because it is cheaper. But now, China is a huge manufacturing hub. And even for a lot of companies to actually move their production to the US is going to take time. Firstly, like we see a lot of companies such as Apple and SoftBank and etc. saying, okay, they're going to spend a huge amount of money in the US to support infrastructure and manufacturing and production, but a lot of those terms are within 5 years. So for the short term, it may not actually be possible for China to, or for the US to achieve its goals. And especially with commodities, with the rare earth minerals, we've seen with the Ukraine and the Russia ceasefire, America's also said, okay, we'll help you with it, with regards to the Ukraine. They're saying, okay, we'll negotiate with China, with Russia, but we want your rare earth minerals, which means a lot of things such as cobalt and a lot of other conductors, especially. China is a leader in terms of rare earth minerals. And now the US is rushing to get those rare earth minerals from other countries. And that is a big deal, especially because a lot of those countries, like the Democratic of the DRC, so Democratic of Congo, those are also rich in those minerals and they have had war, but China owns a big portion of Africa, and that matters. So if we move on and we look at Bitcoin and crypto, what we can see now is we had, for example, the 2021 prior high, and that was back in 2021. And this is when we were still in a very low interest rates environment. But this is also when inflation started to tick higher, and we had a lot of those commodity shortages. And because oil went negative for the first time in history back in 2020, we saw a lot of basically demand shocks or supply shocks because OPEC and so forth, they cut production. And then when the economy started to reopen, all of a sudden there was demand for oil and for a lot of travel, and we didn't actually have enough supply. So this is also when basically Bitcoin started to sell off, and then we saw that bottom, and then we saw that huge surge because we saw a lot of institutions actually investing in Bitcoin. And we've seen the regulatory shift as well, which is responsible for this breakout right here. So here, this is called a teacup or cup and handle. So we see prices actually decrease. They reach a bottom over here, and it's almost a U-shaped bottom. And then this is the handle where we see a consolidation within a channel. And then this is when we had that election or the announcement that Trump was going to come into power once again. And we saw this breakout because we've got a strategic reserve now for crypto. And this was basically the reason that we saw this breakout, not only in Bitcoin, but in a lot of other cryptocurrencies, such as altcoin. Now, we've seen, this is the monthly chart. We've seen now 3 months of consecutive lows. And this was the March, okay, right here. So this was January when there was the inauguration of Donald Trump. And then we saw that pullback in prices because over here, we still had a lot of optimism. We still had Trump saying, okay, crypto is basically going to be a strategic reserve. And he was still very pro-crypto. And he also mentioned about corporate taxes being lowered. So this was very bullish, especially for risk assets. And then the mention of tariffs and the actual reciprocation, or basically the impact of all these tariff threats. And there was also job cuts in the Fed sector, which are ongoing. And this is where recession fears started to get heightened, and we saw that pullback in prices. So we saw the March low over here, 76,735, and that's been providing support. However, when those other additional reciprocal tariffs were mentioned, we saw a breakout, or we actually saw prices step below their prior support, and they reached new lows, which were around about 74,000. I thought I had it here. Apologies. So this was just above the 74,000 handle. And just below that, we've got the 38.2% retracement, and those are Fibonacci levels. And that was of the 2022, if I'm not mistaken, yes, 2022 to the 2025 high. So this now provides a key level because in technical analysis, even though we think history may not repeat itself, it definitely rhymes. And this comes in or ties in with economic cycles and also with seasonality. So we look at the interest rate environment. We've got fears of stagflation, which means that the economy or economic growth may be more stagnant than we initially thought, and inflation is still heightened. Now, inflation is the pace at which prices rise, and that means that the marginal propensity to consume, so the amount of every dollar that a consumer spends, is now being diminished because the cost of loans and the cost of living is still heightened. So these are factors that we need to be aware of, and we need to be vigilant about it. Now, if we look at the daily chart, okay, it's a bit more messy because obviously it's taking into account a lot more data. What we see here is we also saw, okay, that's the March low. As I said, that's the 38%, 38.2% retracement of that prior move. And we saw this breakout in prices, and that has to do with the whole re-election of Trump. But we've seen that gap being filled. Now, this blue line over here, that is, if I'm not mistaken, that is the 200, yes, the 200-day moving average. And this has provided additional support and continues to provide additional support. We saw over here prices declined. They bounced off of there. And last week, we saw a temporary break of that. But as soon as prices actually retraced or broke below that level, we saw a lot of buying pressure, and bulls basically lift the prices higher. Now, additional resistance is at this 50-day moving average, and that's the pink line. So if we're looking for a break higher, we need to actually push prices above the 23.6% retracement. And we also have this orange line over here, which is another key level. And that is also, I can't remember, sorry, I'll get it now. That's also basically a key move. And I think this is actually the longer term move, or this is from that 2021 move. No, it's actually not. But this is also a key level. As I said, I'll get it now. And these provide additional support and resistance. So even if we don't take into account the orange line over here or this Fibonacci, we can see that those moving averages are still providing or coming into effect. And this is once again the 200-day moving average, and this is the 50-day. Now, when it crosses over here and the 50 goes above the 200-day, we haven't got a clear cross, but over here, where we got the 200 or the 50-day moving across the 200 or rising above, that is called a golden cross. And this is very much a bullish sign. So we had the golden cross, we had the 50-day then going towards the 200, but it hasn't necessarily crossed below there. So it's not to say that there's a bullish sentiment, but it's to say that if we look at crypto markets as a whole, and especially Bitcoin, we haven't seen a clear break, or we haven't seen as much sell-off as we have seen with, example, the NASDAQ and the S&P. But the NASDAQ and the S&P has still been really, really strong, especially with regards to the Magnificent Seven, which is the likes of Apple, Amazon, Microsoft, NVIDIA, which is the driver of AI and chip stocks, or at least chips that are used in a lot of tech and robotics. And that's why there's been a lot of investment, especially with AI. But now we see China actually catching up. And I think DeepSeek was a huge blow, especially for the United States, because China, well, with regards to DeepSeek, it's very much like, well, not exactly like NVIDIA, but if we look at OpenAI, DeepSeek came in and they said, okay, we don't have NVIDIA chips. We might not, because now chips in China, especially with regards to NVIDIA, they have been banned, but China's been, well, the way they retaliated was they said, okay, we might not have access to NVIDIA, or at least the advanced chips, but we are actually, we are making sideways, well, we are making additional plans to increase our technology, even without your help, and at a much cheaper rate. So that was a huge shock to tech stocks and also to AI and the United States. And since then, that's why we've also seen that huge sell-off in the likes of AI stocks and in the likes of the tech sector. So now, if we go to the economic calendar, we still have a lot of, well, the tariffs are still driving sentiment, especially because those reciprocal or higher reciprocal rates are bound to come into effect tomorrow. And that's an additional 34% on China. As I said, they have reciprocated and said, okay, fine, we're going to charge you on US imports to China. We're going to charge you 34% as well. We're going to reduce your access to those raw minerals, which are key for AI and tech. And they've basically said the top 16 companies or the big 16 companies, they also going to start retaliating, and they're going to be more strict. Over the weekend, we also saw the sale of TikTok. So the US has also said that TikTok's a security risk, and so they're not allowing TikTok to operate in the US. And that's also been a key driver of now China saying we haven't retaliated so far, but now the US is also pushing us and we are going to retaliate. We've also seen Europe is now also subject to 20% of tariffs. They also a major, and they one of the Western allies of the US, but we've seen the US also exit NATO. And this is a big deal for markets because they're saying, we don't care where, or this is my opinion, they're basically saying, we don't care whether you're allies or not. But in a lot of Trump's comments, he's also said or accused Europe and a lot of other countries for taking advantage of the US. And the likes of Canada and Mexico, which are also now subject to 25% on aluminium and steel, and also automobiles, they're saying, okay, we've actually supported the US. We are large contributors of exports to the US, which means the US imports a lot more from Canada and Mexico, and Trump is targeting those countries with a trade surplus, which means they export a lot more to the US than they import. And Trump's saying, no, if you guys are charging us, we're going to charge you. But as I said, the amount that he's actually targeting and the fact that he's actually charging so much of additional tariffs, all of a sudden we see countries and they're not actually giving in. They are now starting to get together and say, okay, the US, this isn't on. And we see that the US has also benefited from a reserve currency status for a very long time. And we see more and more countries now trying to get away from that. And in my opinion, once again, that is also why that is also why the US has now gone towards a crypto strategic reserve, because a lot of countries have gone towards crypto as more of a not a highway, but a detour from the US dollar. So that matters. Now, if we look at the economic calendar, we see some very important or key data still coming in. Today, we saw Australian consumer confidence and business confidence, and we can see that the forecast was, for example, negative 0.9%. the previous was 4%, and the actual consumer confidence is negative 6%. So we're seeing a very large pullback or a big decline in consumer confidence. And this impacts the consumer spending. This also means that a lot of companies, especially the smaller companies that are looking at those tariffs, are now not going to actually be able to save or spend as much, because now they are also part of those tariffs and they're subject to it, and they can't pass it on to consumers because inflation is also very high and consumers can't actually afford that additional spending. We also need to realize that from the 2008 financial crisis, this time is different, because during COVID pandemic, we had a lot of fiscal stimulus. Government debt is now increasing, but there are a few countries that actually let the recession play out, such as China, and now they do have additional stimulus, and they're saying, okay, we can support those businesses that are now going to be subject to those additional tariffs, just to offset some of those effects. Now we've got China's inflation rate as well expected on Thursday. And then, as I said, tomorrow we've got reciprocal tariffs. We've also got FOMC minutes, which is where the Fed is going to say about, well, provide more potential for forward guidance to say what the Fed is expected to do. Now, when interest rates have been higher, because the US economy, especially throughout the past few years, has still been benefiting from that stimulus, and economic growth has still been relatively resilient. And now, since last year, a lot of that stimulus that was actually pumped into the economy throughout the COVID pandemic has now already gone into the economy. Inflation is still above the 2% target. And when inflation is above that level, we need to realize that the Federal Reserve or central bank has two objectives, and that's to keep unemployment at to keep the economy at full employment, which is an unemployment rate of below 4%, and to have inflation at a 2% target, which means the economy is growing, and that supports higher prices, but wages and everything are also growing. So the economy is pretty much in balance, and we're not seeing that at the moment. Government debt is really, really high, and that is why now Trump is trying to get that down, but through more production in the US, he is saying, make America great again, make America rich. However, in the short run, he has also said that there is a chance of recession, but he's not too focused on that, at least in the short term. Now, the problem, in my opinion, comes in with regards to, as I said, if we look at the 2008 financial crisis, we also had a similar environment, and a lot of companies landed up getting bailed out, especially with banks. But the Fed or the US government had stimulus, or they had money to bail those companies out. And one of the primary reasons for the crisis was that Lehman's Brothers, which was a huge investor or hedge fund, and they were also worldwide, when they didn't get bailed out, that caused a contagion effect that caused one of the biggest recessions. It was actually the largest recession or economic slowdown since the 1929 depression. And that matters because unemployment rose, and just for the economies as a whole, it wasn't a good time. During that time, though, we did see other companies such as Tesla, and especially well, we had the tech bubble earlier before that. But what happened was we also had a lot of other stocks and a lot of companies actually coming up from the 2008 financial crisis. And that is also when we saw the invention or introduction of crypto. And one of the main reasons for Bitcoin was Satoshi Nakamoto, who we still don't actually know who it is, if it's an individual or group of individuals, basically introduced the white paper of Bitcoin and said that they weren't actually a fan of central banks or banks because of the financial crisis and because they believed that banks were actually responsible to a large extent of their financial crisis. So that was when we got the introduction of crypto and blockchain, and it didn't really take off until recent years. And for example, a few years back, or actually, this was 2022, prices were at, I'll tell you now, prices fell to below $1,000. And now we're looking at, so to be precise, it was $880. Now, if we're looking, actually, wait, that's Ethereum. Sorry, I apologize. So we saw prices go to a low of, I think it was around 15,000. And now we're looking at over 69,000 easy, which was the 2021 high. And prices struggled to break through that level for quite a while until those institutions started to pile in. And this is why we've got higher prices. And even though we've had that tariff uncertainty, crypto or Bitcoin went below 74,000 temporarily, but we haven't seen prices go below 70,000, or at least not at the moment. But if we're looking at altcoins, even though recently or today, so yesterday we also saw that huge sell-off, and we saw Ethereum, if I'm not mistaken, was down at 1.19%. And now we've seen that uptick in sentiment, and I think this is just a temporary pullback. But last week we also discussed about key levels, and Ethereum at, well, in my opinion, in the market insight that was discussed on Thursday, I was talking about the the 1,500 level. And we did see prices temporarily test that yesterday. But once again, if we're looking at the chart, which I don't have in the presentation, once again, I apologize, but we did see that lower wick or long lower wick, which was indicative of the fact that prices did fall, but yet bulls then retaliated and pushed prices higher. So yesterday, the low was 1,413, but it didn't actually stay there for long. And it is still flirting with the 1,580 mark. So if we look at the body of the candles, they are now pretty much the same size. And that is saying, okay, bulls are coming in, but we don't have enough bullish sentiments as yet to actually break below and for bullish momentum to resurface. Not just yet. And the thing with the first round of tariffs back in 2016 was Trump threatened tariffs, but then he pretty much was still more open to negotiations. Now we've seen a lot of people, and especially institutions, were waiting for Trump to stall on tariffs and to say, okay, we're extending that out. And this time we haven't seen that happening. He's taken a much more harder stance, and he's playing hardball. And as I said, countries are also starting to retaliate, and that doesn't bode well for risk sentiment as a whole. For gold and for safe havens, yes, it does bode well, and it has boosted that. I mean, gold rose well above $3,000, and it still has that bullish sentiment. The dollar is generally a safe haven, but that has not been performing well because the dollar now, with regards to all those tariffs and the retaliation, people are going away from the US dollar. Although, if we look at emerging markets, the US dollar has still been really, really strong in comparison to emerging markets. But we look at the euro dollar and we look at the pound dollar, and we haven't seen that same follow through. Now, when I went and spoke about the fake news, what I didn't mention is there was a post on X, former Twitter, yesterday to say that there was a tariff deal. And we saw 7 trillion being added back in the stock market. And then it came out that it was fake news, and it quickly raised the gain. So it's not to say that the sentiment is exactly bearish and we don't have hope. It's just to say that there is at the moment, there's a large impact of those tariffs, and the expectations, just as a whole, they are expecting, I think last week, JP Morgan also released facts to say now they're expecting about a 2% deterioration of GDP. And for the world as a whole that is still recovering from the COVID pandemic, that is a huge, huge knock, especially to sentiment and to economic growth. And those fears of the recession and of credit defaults and so forth are really, really heightened. And if this prevails, and if there's no solution, at least in the next few months, it does not, it causes a contagion effect, and we could see a really, really bad recession. So a lot of focus is still on there, and a lot of people, especially institutions, are still hoping for a resolution of those tariffs and the negotiations. For now, we're not seeing that as a possibility, or at least in the short run, but hopefully in the next few days, we can see a bit more optimism. We're just going to have to wait and see. So it's a wait and see approach at the moment, which isn't necessarily good for markets, but it's also saying that those unscheduled risk events or comments, which we've also seen Trump is really, really known for that could also shift sentiment, and we may just see a pullback in prices and that resurgence of bullish sentiment, which is what we're hoping for, because the broader economic picture then looks a lot more positive. For now, Trump and Doge are still very much committed to cutting costs, and that impacts businesses, because if they're cutting costs and there's still a higher interest rates and higher inflation, especially when we come to smaller businesses, they are going to take a huge knock. And we're then expecting earnings season, which is actually happening soon. That's also known as a leading indicator. And we're going to see how companies perform in the first quarter. And so far, with all those tariff fears, we have seen a lot of companies say, with regards to their forecasts, it is a lot more bearish and a lot more dismal to what we saw last year. So that's something else that we really, really need to watch out for. And then if we look at the top 100 constituents of crypto, as I said today, 24 hours, we have seen a bit of positive sentiment. But one other thing that we need to be aware of is the fact that Bitcoin is really, really dominant at the moment. And this represents a lot of fear in the markets. Institutions have been backing Bitcoin. We haven't seen them really buying into this dip recently. If they do, that also promotes or that also lifts prices, but we're just going to have to wait and see. So prices at the moment are still really low, especially on a weekly and monthly, while quarterly time frame. And for the past quarter, we've also seen not only stocks or stock indices such as the Nasdaq and S&P, they dropped or they lost the most market value in 7 years, which is, or actually, since 2020. And that is huge for them. But we also need to realize that they were overbought. And last year, we did really, really see valuations rise. And this has now been a pullback. But markets, unfortunately, when there's fear, the sell-off is usually a lot quicker than the rise. So we need to be vigilant of that. We've seen in 2020, markets really sold off. We're seeing a lot of markets now giving back a large portion of the gains that they got since Donald Trump was re-elected. So now, even though they're testing support, a lot can change, especially if there's earnings. And once these reciprocal tariffs, well, the higher tariffs come into effect, especially when we see the other countries now reciprocate and say to the US, okay, fine, we're actually not going to deal with this. We are now going to, then we can't pass these costs onto consumers. So we're going to look for alternatives, and we're actually going to charge the US higher rates. Another thing that, well, I'm taking into account is the fact that for the past few years, the US has been a services-driven sector or economy. So even though they want to increase manufacturing, it still takes time. There's been mass deportations. They're wanting companies to now move production to the US, but that takes time. We're going to have to see infrastructure increase, and even costs of production, even though there are those tariffs, costs of production could still be high, especially until we see those infrastructure developments and so forth. So for altcoin season is definitely not here at the moment. We're seeing Bitcoin dominance nearly at 70%, which is represented or indicative of that fear in the market. So we're going to have to see Bitcoin dominance actually drop below 50% to see a potential for the altcoin season, which is not happening at the moment, especially if we're in a risk-off environment. So that is all for today. Tomorrow, as I said, is really, really big for markets. We're looking at those reciprocal tariffs, and we're also looking at, for example, China have said, okay, tomorrow there's the reciprocal tariffs. They are now at 54% tariffs or additional tariffs for the year. And Trump has also said, unless they drop their reciprocal tariffs of 34% or that retaliation, he's going to increase tariffs an additional 50%, which would mean that the total imports of China to the US would be a total of 104%. And that will really, really spur that those recession fears. And once again, especially for US stocks or for stocks as a whole and for crypto, that's not very positive. And we could see further devaluations of currencies. And for the stock market, especially the US stock market, to actually raise $5 trillion in such a short period of time, that is huge. That's more than a lot of the GDP from other countries. So even though, okay, the GDP for America or the US is actually at 27 trillion at the moment, the more countries go away from the US, the more obviously it gets prone to recession fears, and that generally has a contagion effect. So those are some of the factors I'm watching. I'll be back tomorrow, and then we'll see if there's any developments in the economy as a whole, and with regards to some of those altcoins, and to see how those are performing, as well as the total market cap for the crypto environment. So thank you once again for joining, and I'll be with you tomorrow. Thanks. Bye.